Are you thinking of placing your money inside a Robo-Advisor saving accounts to earn higher interest? Every Robo-Advisor has different projected annual returns, but it is definitely higher than leaving it in the bank. Hi everyone, I'm Jimsy from Starting Out channel, and today I'm going to share the different higher interest saving accounts available for you. Please note, I'm not a financial advisor, so my video is for recreational purposes only. I'm sure all of you have a bank account from banks such as UOB, POSB, DBS, and many more. Do you know that interest rates can be as low as 0.05% per annum, meaning $50,000 in the bank will give you $25 interest rates per annum. I felt I'm being ripped off because I'm storing my hard-earned money only for the bank to loan out with high interest rates while I receive only $25. So instead of complaining like most people do, I decided to source for alternatives. We will begin with saving accounts across several robo-advisors in Singapore. Here is a table of saving accounts which I compiled. Over here, you can see there are 4 different robo-advisors: Syfe, Stashaway, Endowers, and Money Owl. So each of them have their term for the portfolio. For Syfe, there's Cash Plus; Stashaway, there's Simple; and then Endowers, Cash Smart; Money Owl is Park Your Cash. So what I want you guys to focus on will be the figures, the projected returns before the fees. For Syfe is at 1.5%, and then if I remove off the fund level fees, there's approximately 0.25%. That means the annual projected returns is about 1.25%. If I were to compare all 4 of these robo-advisors, the top contender will be Endowers, that's giving us 2.1%, followed by Syfe at around 1.25%. The third one will be Stashaway at 1.2%, and then the last but not the least will be Money Owl at 0.27%. Based on the projected figures provided by individual robo-advisors, Endowers figures attract me with the highest at 2.1%. As for Money Owl, you can keep the money but let the owl fly away. It's not worth catching it. By the time we caught it, I have already become the next Warren Buffett. But what's worth catching is the legendary Pokemon Jamesy. Simply aim your mouse at the subscribe button and click away. Don't worry about missing because it's a 100% catch rate. Easy to catch, difficult to get rid of. Moving on, our next option is well known to all. Banks do offer higher interest rates saving accounts, going up to 2.5% per annum, but there will be certain criteria you have to meet. If you are interested in bank saving accounts, you can refer to this table created by Seedly. I also put their link in the description box below. Each banks offer different rates, and you will have to research which one suits your needs. OCBC 360 favors savers, while UOB 1 caters towards big spenders. I personally uses OCBC 360, which I enjoyed 0.4% interest. It's still better than 0.05% for sure. So for OCBC 360, if you look at the table over here, I fall within the first tier, which is the first 25,000. You just have to credit $1,800 of a salary and you'll receive 0.3%. And if you save additional $500 monthly, you have additional of 0.1%. So that's why my interest right now is at 0.4%. Of course, if you have more money, you can move on to the second tier or the third tier. And should you decide to invest, insure, and grow with OCBC, as you can see over here, your interest rates will definitely increase. Now, you may say, why is this Jamesy contradicting himself? Can he make up his mind or not? So is he storing his money in Endowers saving accounts, or Cash Smart Safe, or OCBC 360? Let me lay out the pros and cons for you. The advantage of having a robo-advisor saving accounts is higher interest rates. These advantages will be the return rates are not guaranteed. So on paper, maybe it's stated 2.1%. Then if the economy is not that good, it may fall back to 1.8, 1.6, 1.7. we don't know what's going to happen. Number 2, it will take a few days to process deposit and withdrawal. So if you need money urgently, for example, you have to pay hospitality bills, then GG, God bless you, because you have to wait for the next 3-4 days. Third, they are investing in stable mutual funds, but you will still experience losses. Not say it's very common, but it's still fluctuating. It's relatively safe, but it is not as safe as putting it in the bank. Now we look at banks. What are the advantages of putting your money in the bank? You can withdraw anytime. So if you want to go out, you need money, just go to an ATM, beep 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 beep, and you got your whole hard cash. And banks are less likely to close down, so you can sleep better at night. The disadvantages, low interest rates. That's why I'm making this video. As of now, I have a Safe Cash Plus portfolio, which I will be switching to Endowus Cash Smart. I will share more with you once I switch over. Storing my emergency funds in Robo-Advisor carries certain risk and is not visible for me because I may need it urgently, so I kept it in my OCBC bank. As for you guys, who knows? Some of you might need it to extend your OnlyFans subscriptions, or when COVID is over, you plan to go Thai club and Tiaohua, also known as hang flower, but realize, all your money is in Endowus Cash Smart. Can hang flower first, but pay 4 days later. Now, you can also hang a flower on me by clicking the subscribe button, because a flower a day keeps the COVID away. Okay, enough of the lame jokes. I hope my insights provide a better understanding at different savings accounts in Robo-Advisors and banks. Don't forget to check out the Seedly website in my description link below. Like and share this video with your friends so we can all learn together. And that's all I have for you guys. Jimsy signing off.